All right. Well, are you all able to hear me? I think everything should be good. We'll just begin in a minute. Just going over the text and we can begin in a minute. All right. Just make a few posts. All right. Should be good. Right. So, welcome to another weekly review. And as you all know, we actually begin with the dollar index every single week. But today we'll begin with Bitcoin, because Bitcoin has moved perfectly from our fair value gap here, the 50% level, all the way down to sell liquidity, just as I marked out 4 weeks ago. All right. So we have about 4 live streams conducted on YouTube. And the first time when I outlined the scenario. I said, I just gave you one scenario actually. I didn't give you anything else. I didn't say that Bitcoin's going to go up. I told you a clear defined direction. I said we're going to move lower to this sell liquidity pool, and we also have equal lows here, right? And as you can see right there, you see price stops right there. That is because this is algorithmic, okay? For value gap, dealing range, price retraces into into premium, taps into the 50% of that fair value gap and expands lower, right? So you may have learned about structures, how we have a clear defined range. So price will move lower, move back higher to the 50%, and then move lower once again. That is exactly what we have. Now, what are my expectations for Bitcoin moving forward? All right. I know everyone's waiting to hear that. So let me come out first and tell you that my expectations for Bitcoin is right now to remain neutral. Okay. Just as I remain neutral when price dropped all the way from here to take out this sell liquidity pool, right? So I call the move all the way from here to here. Price got there. You can see this aggressive reaction. And what happened after price took out the sell liquidity? We consolidated, right? A lot of people got into positions here. They saw this expansion higher. They were all bullish. That is really why we were out. We waited for price to give us more information. And in this case, it was just this dealing range and price moving into a premium fair value gap. That is really where we took a short and price pushed down lower, taking out this sell liquidity. So now once again, since we have taken out a major liquidity pool, we should be neutral, because right now there are two scenarios that can occur, right? And I can see on the socials that everyone is leaning bullish, right? Everyone expects Bitcoin to move all the way higher here and this to be the low. I personally don't believe that. I believe that price will push lower. Now, are we pushing to $30,000 or $50,000? I can't say right away. But if I have to take a guess, I would definitely say that we would push lower here. And the only levels I see below $60,000 would be 55,000 and 50,000. All right. But for now, let's not take that into consideration. We'll just remain neutral. Now let's actually begin with dollar index. All right. So this was a clear defined range we had planned out in the previous week. And those who say that fair value gaps don't work, those who say that clear ICT concepts don't work, just pure ICT concepts. We are not really dealing with anything else, just charts and these levels. All right. So what did we have here? We had the weekly range, right? So the weekly time frame. Price returns to the 50% of the dealing range right there. It takes out a liquidity pool right here, pushes higher. Now, what do we have here? Price takes out previous week's high, pushes down lower into a bullish weekly fair value gap, right? So in the previous week, you may hear me say that I said this is the time to remain neutral, because why? We can consider that this to be the dealing range, and price would have pushed higher into premium of this range, and we could push lower or we could push higher, right? So two sides can be framed. But right now, with this weekly candle, we have all the confirmation we need. This is exactly what I was waiting for. This is exactly what I outlined in the previous live stream as well. We have closed above higher, which means that you can see this closure. We closed above this high, which has taken out liquidity here, right there. So that means that dollar index is bullish and it needs to expand higher. All right. So if dollar index is going to expand higher, where is it going to go to? We have a clear defined level right there. That is your buy side liquidity. That is really where dollar index should push higher, right? Now we can delete all of this, but I'll just let them be. You can see that we have a retracement into discount and we need an expansion once again to take our buy side. Do I believe that price will reverse from here? No. I just believe that the move from here to this level right there is high probability, is with good conviction. So price should definitely get that. All right. So if we move to, let's say, the daily time frame, you can see it's quite clear here. May I mark this out twice? Wait, that's the daily fair value gap right there. Okay, this is a daily time frame. This is your buy side liquidity we are targeting. You can see that we had this bearish fair value gap as well, right? So what did price do in the previous week? It took out buy side liquidity here, or highs here, retraced all the way lower into this bullish fair value gap. We tapped the 50% of that fair value gap, right? The exact same way we did with Bitcoin, right? So it's one thing to remember to always mark out the 50% level, or you can simply do that by clicking over your rectangle right there on TradingView. Go to style and turn on the middle line, right? It's quite easy. You should always keep that in your charts on the higher time frames. Now, getting back to dollar index, we have taken out these lows right here into this daily fair value gap. But even here, right there, even when price takes out this high, we can expect a small retracement, which I did. But this closure here, which is your NFP release, that really gives you a clear direction for the month. And in this case, we have closed above this bearish fair value gap, which means this high is pretty much guaranteed for price to go to next. All right. Or should I say it's really high probability for price to get there. So just keeping it clear on the weekly time frame. Dollar index, we are bullish, and we should definitely target 100.643 next. Which means if we are bullish on dollar index, we should definitely be bearish on euro, right? So we have sell side liquidity right here on the weekly time frame, which is 1.14110. That is the ideal price for euro to get to in the coming weeks. See on the daily time frame, this is really, really good. This was your clear dealing range. Price gets a discount, retraces into this bearish daily fair value gap, which I outlined, and price returns and reverses right off of that, right? Isn't it quite amazing to watch how price reverses exactly at these gaps, right? So if anyone prefers trading order blocks over fair value gaps, then they really have no idea, and they can not do this week over week and show you why it's better, right? And in this case, since we have closed below this bullish fair value gap, we should definitely get to the sell side liquidity based on the exact structure which we just observed with dollar index. So the draw for euro for me would be this low right here. Okay, this is your sell side liquidity. That is really where I'm expecting euro USD to push to next. You can delete this fair value gap. You can delete this dealing range. We don't need any of it. This is your current dealing range. So this low will be first, and then these lows will be taken out, right? So all you need are these two levels: daily fair value gap, a bearish one, and sell side liquidity. You can also consider this to be internal liquidity to external liquidity, right? Anyhow you would wish to frame that, but all you need to understand is fair value gaps to highs and lows to fair value gaps, all right? Now let's move to GBP USD. And let's see if we have a clear target. So outlining from the previous week, we have a clear weekly structure, weekly bearish fair value gap. Price just closed through, but we aggressively closed back in. Closing below this bullish fair value gap, we retraced into a bearish fair value gap, and now we have an open high and price is pushed down lower. So this level right here was a drawn liquidity, as I have this marked out from the previous week. So in the daily time frame, we are almost there, but we should definitely get there. And after that, I do expect GBP to first get to this low. All right, that'll be my first draw moving on to the next week. And after that, definitely I would expect price to get to these lows and these lows. All right, these are not confirmed yet. Let price get to this low first. Let's see if it wants to react aggressively and move higher, or if it just wants to close through and push lower. Right, we have to observe a couple of things. So let price get there first, and then we can form a clear bias. So just for a quick recap, we have bearishness on GU, bearishness on euro, and bullishness on dollar index, right? Correlated pairs positively with euro and GBP, and negatively with euro and dollar index, right? So let's move to NASDAQ. Now this was quite good to watch, right? Now, is NASDAQ bearish? Am I expecting NASDAQ to get to these lows? Not at all. We have expanded quite aggressively from the month of March. Every single week has been closed bullish. You can see here 30th March, 6th April, 13th April, 20th, 27th, 4th. This is just a small indecisive candle, right? You can call that. But in the next candle, we took out the previous week's low and expanded once again. So this is just a healthy retracement. All right, there is nothing to worry about. Especially with the structure, we do need a topping structure to form to consider that price is going to get to these lows. But for now, there is nothing of that sort. But in the daily time frame, it is quite nice to observe that the concepts do play out pretty well, right? The first thing you need to note is we had SMT at highs, right? So an all-time high, we have an SMT presented right there. Price takes out previous day's high, which is Tuesday's high on Wednesday, forms your SMT divergence. That is the high, that is your high of the week. We have an opening price right here. So you have an open, high, low, close, right? OHLC. And we're using SMT and power of 3 to determine. That is basically all I do. So price has really pushed quite aggressively. And we do have a closure below all of these upclose candles, right? So a quick lesson for you on change in state of delivery. Whenever we have a change in state of delivery, that is not going to be your up close channel right there. This is the wrong way to determine a change in state of delivery. This is the correct way. We need to consider all the series of up close candles leading to this reversal. So in this case, this is your change in state of delivery, and price has confirmed us a closure through, right? So do I believe that this is the true closure and price is going to probably get to here? It could, but I would say price will probably retrace to the premium of this dealing range formed here in the coming weeks. And after that, we could probably see if it wants to push here and push back lower, then it could definitely mean that we would probably get to these lows next. All right. So I would say caution is necessary here for NASDAQ, but just by looking at this exact time frame or this exact structure, I would not really believe that we are going to get to all these lows, right? I need a bit more information. And what I want to see is what the next week does, all right? It's just daily closure. I do want to see what price does in the following week. If we do open, retrace here and push down low once again, then I would be inclined to consider that this could be the high. If we open, probably push lower, take one of these fair value gaps and expand higher once again, then we're still on the right side, all right? So for now, it would be good to be cautious and just let that be for NASDAQ, right? Anyways, I do take day trades on NASDAQ. I'm not really invested much, especially since this move higher. So just a personal, just something I do discuss with the university members. I did call the move all the way from here to here, right? To this monthly fair value gap. That is all it was. On the daily time frame, it was quite beautiful. We did see a significant drop from here to here, but I didn't really buy here, all right? So I did not buy here, and I have missed this move higher, right? So I'm not really keen on buying NASDAQ here. So I would rather much wait for a topping structure and try to short it once again and probably target all of these lows next, all right? We'll see how that goes. So for now, it's best to remain neutral on NASDAQ. ES, that is your SMT, where ES has not taken Tuesday's high and we have formed the SMT. And do we have the change in state of delivery closure here? Yes, we do. We have a beautiful closure here. This would be a market structure shift because you have a swing low. So we have both of them presented on ES as well. And you can see the SMT is weaker on ES, so ES should push lower to these fair value gaps. If it does, we'll see how in the beginning of the week performs, right? So if Monday consolidates, it's most likely to because Friday expanded. So you have expansion, consolidation, expansion. So Monday is most likely to consolidate. And then moving forward, we could definitely observe if price wants to push back in, bearish daily fair value gap and move lower, or it wants to just expand higher, right? So we definitely wait that out and see how it goes. So for now, we'll remain neutral with NASDAQ and ES, all right? Now let's move to gold and silver. I've been quite on a roll here, even on gold and silver. So we are bearish on gold and silver from the previous 4 weeks, and we are moving quite well. We have a nice closure here. This is our drawn liquidity here. This is really where we want gold and silver to reach. And what I'm trying to do here is once price does reach these levels, I will most likely stop conducting these weekly live stream sessions because I would have really proved what I'm trying to prove here. And what I'm really trying to prove is with simple gaps and lines, you're able to figure out where the market is going, right? And the reason why I also do it with these various assets, I do it with gold, silver, Bitcoin, NASDAQ, Euro, right? You have Forex, futures, crypto, all of that is because I want to show you that with simple lines and fair value gaps, but with clear understanding and the reasoning behind why price needs to go somewhere, that is basically all you need, right? That takes experience and of course, using the correct concepts. But once we have reached all our objectives, I definitely don't see any other point in streaming after that, all right? So that is when I will be conducting these streams until the objectives are met. So for Bitcoin and Ethereum, crypto has been done. We have met our objectives quite beautifully. So I have no other interest with that. Dollar index and euro, we do have that going on a weekly basis. So I have no issues with that as well. And NASDAQ and ES, we have really not topped out yet. So probably it's going to take a few more weeks. And gold and silver, we're almost there, right? So I should definitely see price open the next week and probably cascade lower to take out these lows, all right? So let's move to daily time frame. And you see this, right? This fair value gap, I did not mark it now. It was marked from the previous 3 live streams. That is really where we are pushed lower from. And we should really get to sell side liquidity here and these lows, right? So we're still good. Gold, we're really dropping. Daily fair value gaps, retracement, push down lower, retracement, and moving lower once again. So these lows are the draw for gold. That is really where we should get to. $4,000 is my bias. I really want to see price get there. That's really where the liquidity is, all right? Moving on to silver. Quite beautiful, right? We just had a retest of change in state of delivery. You can see this drop. I don't see anyone calling bearishness for gold or silver, so you're the first one to see it here. And I've been calling it from all the way here, right? So all the way here, the university members have seen me call it from here. I actually sold back here, but this move, you all are seeing it live on YouTube, right? So gold and silver moving quite well, and these objectives should be met within the next few weeks, right? So I say you can definitely consider we have a live stream next week, all right? So that is gold and silver. Let's just look at Bitcoin and Ethereum once again. See a beautiful move from the 50% of the fair value gap to sell side liquidity, right? Beautifully moved. We basically used nothing here, just a weekly fair value gap, right? A gap and a low, a gap and a level, that's it, right? So we already discussed Bitcoin. Let's move to Ethereum. And here we have it. Ethereum was the draw as well. This was marked out in the previous week. This is your dealing range, as I mentioned, and we have reached the objective, right? This is my final objective for Ethereum, but we have reached here and any trades should be closed right about here when price takes sell side liquidity, because you could expect price to retrace, right? That could occur. So you should protect yourself and definitely take out positions whenever it takes sell side liquidity. And similarly, even if it's bullish, then you should definitely take out when price reaches buy side liquidity, all right? So that would be it for the stream today. Let me just check the chat. I'm not really sure if there are any questions, or if not, then we can end the stream here. Let me just check. All right, so there is Abi. Okay, nice to have you here, Abi. Okay, I'm doing well. Hope you're doing well too. Okay, your question is how to get that trend line with price. I'm not really sure what you mean with the trend line with price. I think you mean this. Okay, this is just a price note. All right, you'll be able to find it in TradingView. This is called the price note. All right. Okay, on the lower time frame, order blocks are much more reliable than fair value gap. On the high time frame, FEG is 100%. Right, so it really depends on how you're using your order blocks. So it can definitely be for entries, then yes, I would definitely recommend order blocks are better. We actually call them change in state of delivery. But on the higher time frames, definitely fair value gaps takes the crown. All right. Okay, I can see we have about a few more viewers. If you guys have any questions, I'll take them now, or else I'll just end the stream here. And wish you all a good weekend and a good trading week moving forward. Right, so let me just try to explain a concept while you guys are all probably thinking about asking a question. Okay, so the first thing is, let's just clarify on Abby's order block theory on the lower time frames. Okay, so let me just go to Bitcoin. And you can see that we have tapped into a fair value gap and pushed lower, right? So this was a clear draw for us. And price returns into a fair value gap, pushes lower, our objective has been met. All right. Now, if I move to the daily time frame, and this is really what I mean, Abby, regarding order blocks as entries, right? You can see the 50% level is right there. So that is really when price reached your higher time frame already, right? There. So let me just remove that to the side. Now you can see that we have a change in state of delivery right there. So you can consider this as your order block, right? Or you can consider this to be your order block because you have up close candles right there. That would be your entry. So yes, a fair value gap as an entry, you would have not really got any with Bitcoin to capture this move lower, but a change in state of delivery or an order block, it does work, right? So you have the weekly fair value gap right here on the higher time frames, and if you move to the daily for execution, you definitely have an order block right there. Okay, that is really where you would short. This is kind of how your position would be. Stop would be above the swing high, and you would target sell side liquidity right about there. All right, so that's how it works. We can definitely use order blocks. I do use order blocks as change state of delivery on the lower time frames whenever I'm executing. So in the execution time frames, order blocks are pretty good. But whenever I see a fair value gap during execution, I find that to be quite better. All right, so let's just have a look at Bitcoin here, where price takes out this high right there. And pushes lower with the fair value gap, right? So I definitely prefer a fair value gap over an order block. Because in this case, an order block would be right here because it's your change in state of delivery. But if a value gap, we do have an entry, and you can definitely take off positions once it takes these lows. Right? So that is my take on it. I definitely prefer fair value gaps over order blocks, but whenever an order block is presented, I definitely don't mind, especially if I have the context in play, right? So if price does get into a weekly fair value gap, a daily fair value gap, a monthly fair value gap, gives me a change in state of delivery on the daily or the 4 hour, I would definitely look for position. I would be quite confident in it, but just order blocks on its own, I would definitely not recommend that. But just for value gaps on its own, I would definitely recommend that. All right. So thank you all for joining, guys. Hope you all are enjoying these live stream sessions. Do drop a like if you are. I don't really like asking for likes or subscriptions or any of that. So hope you all are enjoying this live calls on YouTube, right? So nothing is on hindsight here. I don't really do any of that. I find that to be quite insulting, because you can really mark out anything after price is played out. Right? I could probably mark out 50 different concepts right here, which pushed price lower, but I'm trying to teach you a clear, simple way of doing it, which is just for value gaps and highs and lows. All right. So with that, we'll end the stream here. Hope you all have a great trading week ahead, and I shall speak to you all next weekend at the same time. All right. Take care then now. Bye-bye.